Now may be the best time to invest in real estate in the next 10 years. That's not just a statement to get you to watch this video. I have 3 charts here that I'm going to show you that will unequivocally lay out why now is one of those inflection points to invest in real estate. Real estate's been pretty tough over the past couple years, but going forward, I think real estate is going to absolutely explode. So if you invest now or start the process of investing, you would be literally buying the dip. My name is Sam, and I bought over $50 million worth of rental properties, all using other people's money. I have a house buying company that buys 250 to 300 houses a year, and I have about 3.5 million followers on social media, all with real estate-based content. So to say that I eat, breathe, and sleep real estate would be an understatement. And I'm here to tell you that I think that right now is one of those unique opportunities that don't come along very often, and you should start investing now. I have these charts that I'm going to show you that will explain exactly what I'm talking about, but the point is, get in the game now, because if things do what I think they're going to do, and you start when everyone else starts, you will be figuring out where the ignition is, you'll be putting on your seatbelt, and you won't have an advantage. However, if you start now, when everything takes off, you'll be able to step on the gas and leave the competition in the dust, to continue that weird vehicle analogy. That being said, thank you for being here. Hit the like button and let's get into it. So in order to fully explain what's going on in the real estate market, I want to talk about predicting the next 12 to 18 months. I'm going to take this thing from a macro view, overarching 30,000 foot view, down to a micro view, and explain to you why now and always, I guess, is a good time to invest in real estate. So the first chart I want to show you that hopefully will get bigger on the screen with my editor is the dollar purchasing power chart. As you can see, this chart has a very, very downward trend. And what this chart shows you is what the dollar can purchase based on the cost of goods. This is why it costs $12 to eat at Taco Bell by yourself. And when I was little, my entire family ate there for $5. This is why candy bars cost $2 now and used to cost 25 cents. This chart explains the dollar purchasing power that you have goes down every single year because of other factors we'll talk about, like inflation and cost of things. So in general, looking at this chart, over the next 12 to 18 months and beyond, what percentage certainty do you have that the US dollar is going to go down in purchasing power? This doesn't talk about the US power globally and 90% of transactions across the world are done with the US dollar in trade. That's not that. This is in the United States, the purchasing power. I'm going to answer this because this is a video and a one-way conversation. I have 100% certainty that the US dollar is going to be able to purchase less because mainly inflation is here, and that directly affects what my dollar can do. This is showing you that my dollar and your dollar goes down in value every single day, and I think that's going to continue to happen based off of what I know and based off of this historical chart. So that is the first thing I want you to consider overall. The money that you're chasing, the dollar that you're going after, that raise that you're wanting to get, that money in your bank account, that all is losing value every single day. Again, macro to micro. The next chart I want to look at is the Fed money supply chart. This is how much money the Fed prints. Now this one is the opposite of the dollar purchasing power chart. This one has an upwards trajectory because this is how much money the US prints. And as you can see, there is a slight dip in 2022, but that was still $21 billion worth of money printed. And as you can see, that extreme upward trend right after COVID when all that stimulus money was printed. But looking at this chart and the general trajectory of it, with what percentage certainty do you have that the Fed's gonna print more money in the next 12 to 18 months? My answer to that is 100% certainty that the Fed is going to continue to print more money year over year, decade over decade. Definitely the next 12 to 18 months and beyond, the US is going to print more money. Hopefully you understand that and can see where I'm going with this. The US is going to continue to print more money. That, coupled with inflation, means, like the last chart I showed you, what you can buy with a dollar goes down. So what this tells me at a macro level is don't chase money because it loses value. Chase things that are tied to the Fed money supply and inflation, which is assets. So I think in a roundabout way, we arrived at the third chart and by far the most important chart that we're going to spend a lot of time on. And that chart is the median house price chart. And again, you can look up these charts on your own if you would like. They're put out by the government, by Fred. So just look up these charts and you will see the exact same thing. This is the housing price chart. This is the median house price chart that goes back to 1950, basically is what I'm showing you. And this one has an upward trend as well, pretty similar to the Fed's funds printing chart. As you can see here, real estate goes up in value over time. I always tell you, real estate doubles in value every 15 years. Lots of times it more than doubles, and this chart shows that. Go do your research on your own. If you bought a house in 1970, by 1985, it doubled. If you bought a house in 1982, by 1997, it doubled in value. Real estate doubles in value because it is tied to inflation and cost of replacement. As you can see from this, '08, from a historical median perspective, is going to be a blip in the radar once this chart gets big enough. '08 was a global recession and it affected all industries, but the median house price in America went down about 15% over a few year period, which is a big deal. For sure. It affects a lot of other things. It is said when the U.S. housing market sneezes, the entire world economy catches a cold. So it was a big deal, but look at this. Within a couple years, it had already rebounded and was again reaching records highs. This is why everybody always says houses that are an all-time high, they're gonna go down. Houses are an all-time high, they're gonna go down. No, they're not, they don't. Occasionally there are dips. They are short-lived, and if you invest properly, it doesn't matter if the value dips. If you're not looking to sell and you're paying your mortgage because you're collecting rent, because you're a landlord and not a slumlord and you do things the right way, it doesn't matter at all what the value of that house is. So in general, the trajectory of real estate is upwards. So with what certainty do you have in the next 12 to 18 months, I'll ask you this again at the end, and in the next 10 to 15 years, that real estate is going to go up in value? I have 100% certainty there will be occasional fluctuations and maybe small yearly or even seasonal dips, but real estate's going to go up in value. It always has, it always will. Again, because it's directly tied to the cost of replacement and inflation. So if somebody builds a house next to my house in 5 years, it is going to cost them more money to build that house than it did for me to build my house 3 or 4 years ago. Wood's gonna be more, drywall's gonna be more. The most expensive thing, labor is going to be more. Shingles are going to be more. Land is going to be more. So the fact that someone's building a house very similar to mine in a few years, yeah, it's probably valued at a little bit higher than mine because it's brand new, but my value is going to go up as well. So that's the hidden reason why real estate always goes up in value. All right, that's our macro. The dollar purchasing power is going to go down. US is going to print more money, and houses are going to go up in value. So knowing those three things, let's dig into this chart and let me show you some crazy evidence that I just came across and a prediction of what real estate is going to do in the next 12 to 18 months and beyond. All right, so let's dig into this chart a little bit. I'm going to look at it basically from 2000 and on to look at what the trend is going to do. So zooming in here, from 2000 on, you'll see real estate has gone up in value. And let's look at these little gray bars. These gray bars are recessions. You can see there was one in the early 2000s. There was obviously one from 2008 to almost 2010. And then there was a quick one right after COVID with all that craziness. The big thing to notice is, the first thing I want you to notice is, after recessions, what tends to happen to the real estate values? The 2001, 2002 recession, you can see real estate steadily went up for a few years. Then a crazy once-in-a-lifetime crash happened, and we had a little bit longer of a recession, but then real estate steadily went up in value for 10 years. And then it started to level out a little bit, and then the recession after COVID, the printing the money, the inflation, all the things that we've talked about, real estate really, really went up in value. So a lot of people think right now we are in a hidden recession, because a recession is not just 2 quarters of declining GDP. There are other factors that go into recession, and everyone that I talk to is struggling. All the small business owners that I know are struggling right now. People don't have a ton of extra money to spend, and the economy are not doing very well. The recent job reports and the hiring that's going on is definitely indicating that. So just the first level, and we're going to go deeper and deeper, is I think we're in a gray bar right now or will be very soon, or we're in a hidden gray bar, and after gray bars, after recessions, house values go up. The other side of this, to dig one layer deeper, and then we're going to go all the way to the bottom before I give you my prediction, is as you can see, there has been a few times where real estate has remained stagnant. We see from about 2009 to 2012, real estate basically remained level, up, down, but the overall level was pretty normal. And then a pretty steep skyrocket started in 2012. Go to 2018, and you can see that very same leveling out of up, down, but overall those 2 years from 2018 to 2020, real estate overall had a very stagnant value. It did not go up or it did not go down. What happened right after that? House prices absolutely skyrocketed. Now go look from 2023, 2022 till now, 2024, house prices have remained very stagnant overall. Of course, this is all location driven. Some markets are hot right now, some markets are cooler, more cooler than there have been overall recently. But in general, the exact same thing has happened. House prices are remaining pretty stagnant overall. So a little bit layer deeper, I think that that also means we are getting ready to springboard house prices. And I know you say affordability is tough right now, and I would agree with that, with the cost of insurance, the cost of real estate taxes, and the overall cost of houses. But that was also the case in those other times because real estate always goes up. So we're always at or near all-time highs with small, short blips. Now let's go to the very core of why I can confidently tell you that I think real estate is going to absolutely explode over the next 12 to 18 months. So what we're going to do now on this chart is we're going to overlay the Fed's funds rate chart. This is the interest rate that the Fed's funds small local businesses, to keep it simple. The 30-year mortgage is kind of tied to the Fed's funds rate, but not directly. There are some links and there are some similarities, but the Fed's funds rate is what the Fed funds businesses at. This is just the interest that the Fed charges to lend out money. The higher this is, the more money the Fed is actually making because of the interest, but then it hurts the small businesses because their cost of money goes up. And this includes people with laundromats or people with lawn care services, all small businesses that borrow money. This is typically the rate that affects them, and that affects the overall economy and affects the profit margins, how much they pay their employees. You can see the ripple effect of the cost of money being higher for small businesses, most that already have pretty small margins. Now, let's look at history and what has happened, because history tends to repeat itself, if not at least echo. As you can see, right after 2000, the Fed's funds rate was pretty flatlined. And then it went down during the recession. And what happened as it went down and hit the bottom? House prices skyrocketed from 2001, 2002, all the way up to 2007. Now look at what happened to the Fed's funds rate around 2006. It flatlined, real estate values kind of flatlined, and then it went down, obviously during the recession, but it went down by a lot, down to zero. What happened when it got down to zero? House prices went up, and the Fed's funds rate stayed low, low, low. House prices went up, up. And then you can see about 2016, the Fed's funds rate started to creep back up. And what did housing values do? They kind of flatlined like we just talked about. It plateaued a little bit, and then the Fed's funds rate went down, back down to zero or close to it. What happened to housing values? They absolutely skyrocketed. And then inflation got out of control. And then as you can see, the Fed's funds rate went up at an historic pace. It has been higher in the past, but it has never gone from 0 to 5.5% that quickly. So it's an historic rate of increase. It went up, and what happened? House prices kind of steadied and evened out and stagnated. And then what happened for a short period of time? It was flat. And then what is the trend now? It's already gone down. Powell has already talked about lowering it here soon, and there are talks it's going to be lowered several more times. So that tells me that house prices are going to go up because it happens every single time. So you not only have the macro trends of real estate goes up in value, money goes down in value, chase real estate, don't chase money. Real estate's a good investment, the best you're going to have. But then as you drill down into this chart and lay over the Fed's funds rate, I think it's very obvious what's going to happen next. It may be 6 months, it may be 12 months, but very soon, within the next 18 months, real estate is going to absolutely boom again. And you can sit on the sidelines and wait until that happens and get in when everybody else gets in and make a little bit of money but have no competitive advantage because you're trying to figure out a funnel for houses and you're trying to get your lenders lined up and you're trying to figure out which contractors to use and you're trying to develop relationships with banks and DSCR lenders, or you can start now and hit a single or two, do decent, learn the ropes, connect with the right lenders, connect with the right lead sources for actual deals, get to know some contractors and start to do some deals now so that when things do cut loose, because they're going to, you can absolutely take advantage of that and just make tweaks and step on the gas and just stay out of the ditches, as opposed to, again, the car analogy, everybody starting to figure out how to start their engine. So now is the time. Is it a little bit early? I don't think so. Maybe a little bit, but I'd rather be a little bit early than way too late. I'm trying to help you achieve financial freedom through real estate using as little of your own money as possible, like I did. I bought $50 million worth of real estate during some of these crazy times using other people's money, and now I'm here to show you how to do the same thing, and I'm even putting a prediction out to help you do that. So buy real estate. Figure it out on your own or get some support to do it. Most people are successful with support. Maybe you're different. That's on you. Regardless, make sure you're subscribed to this channel. I'm putting a big focus on YouTube going forward to produce videos that are well thought out like this. As you can see, my style isn't news anchory, but the content's gonna be there, I promise you that. So subscribe, hit that like button, ask questions in the comments, and if you want even more support, I have several freebies that are in the description, like scripts and calculators and things that can help you. And if you want to take it to the next level, we have some mentorship and some coaching, but let's not worry about that right now. Subscribe to the channel, follow me here, follow my podcast, The FasterFreedom Show, get the freebies, and then we'll talk. Real estate's going up in value. Are you going to ride that wave to financial freedom and generational wealth? Or are you going to be stuck on the sidelines working a W-2 job, chasing the thing that loses value every day, money? The choice is yours. See you on the next one.